You might have heard there's a lot of reasons to do a Roth conversion. Today I'm going to go through 5 reasons not to do a Roth conversion. First reason is your income's actually too high today. The whole point of Roth conversion is that you are locking in, paying in the taxes at a specific rate so that you don't have to pay the taxes in the future. When you look at Roth conversions, you really ought to plan out and see what your taxes are likely to be, both now and in the future. If you see that your taxes today are higher than your taxes in the future, that's a reason not to do a Roth conversion. Another reason not to do a Roth conversion is somewhat related to taxes, but imagine you're below 65 and you need to make use of the Affordable Care Act. When you are on the Affordable Care Act, you get prepaid premium tax credits, they call it. And you might not find out that those are really premium tax credits that get trued up at the end of the year until the end of the year when your tax accountant is going through and you find out you owe a lot more money, not because of the taxes, your normal income tax rate, but because you have to repay the prepaid premium tax credit. When you take out money from a traditional IRA, convert it to a Roth IRA, that goes on your income, which makes your income higher. And if you're on the Affordable Care Act and you are then getting the premium tax credits, a lower tax credit means that you are paying higher taxes. Another reason not to do a Roth conversion, take money from traditional IRA money to Roth IRA money, is your IRAs, your traditional accounts, might be going to charity in the future. Perhaps you're waiting till you turn 70 and a half when you have that ability to do qualified charitable distributions. If you're a charitable person, why would you take money from your traditional account, switch it over to a Roth IRA, pay the taxes today, and then take money out of your Roth IRA later on for giving it to charity? You might want to preserve money in your traditional IRA so that later on you can take the money out as a qualified charitable distribution tax-free. Or perhaps you're actually truly leaving some money to charity as a beneficiary, where you don't think you'll be using it yourself. You're not giving that money perhaps to kids, this specific account. If that money in the traditional IRA is destined to go to charity, you might want to think twice about, should I take the money from the traditional to the Roth? You would have paid the taxes on converting over to the Roth, and if it then goes to the charity tax-free, it would have been tax-free anyways, even if it was in the traditional. So your choices and your plans for charity might be a reason not to take it from traditional, moving on over to Roth. Another part of your conversions from traditional over to Roth is, again, it gets added to your income, and it's not just your taxable income, it's your income, something called modified adjusted gross income. If you're on Medicare, you'll become familiar with that, because if your income is too high, you jump over these certain levels, you become eligible now. You'll be required to pay extra amounts in your Medicare because you had an extra high tax year and you ended up paying taxes on that, but you end up paying 2 years later where your Medicare shows up as a higher amount. Now, there are times where you can ask Medicare to lower that penalty, that extra premium amount, but going from a traditional to a Roth is not one of those times. If you're over 63, because it counts 2 years later, think about your Medicare premiums and if it will be worth it to take it from traditional over to Roth. Another reason why you might want to not do a Roth conversion is it might be close to the time or in the years where you're filling out your college financial aid forms, the FAFSA forms. Because again, traditional IRA conversions will make your income higher. And perhaps if you have too high of an income, whether that was a good idea for the long run or not, if you have too high of income, it might go on your FAFSA then, your college financial aid forms, to say you have a higher income and now you're eligible for less aid, whether it's the federal aid or directly from the college. So when you're planning out your Roth conversions, it's not just a matter of all Roth conversions are good, or when you're younger you should do Roth conversions. You need to plan out exactly what your situation is going to look like, and don't just look at only the tax situation. Think of other situations that are somewhat related but not exactly only your income taxes, like the college age situation or the Medicare taxes or Affordable Care Act. The goal of the Roth conversion is to save you the most money over your lifetime, and it's not only specifically this year's tax return that matters. Hi, I'm Jeremy Keil, owner of Keil Financial Partners. And if you're interested in seeing how we help our clients get more income, pay less in taxes, and avoid big retirement mistakes, make sure to go to keilfp.com. That's KEILFP.com.